All right, guys, so here we are in my M1 Finance portfolio. And as I've talked about in the past, my main focus in this in this M1 Finance portfolio is on dividend stocks. What I did is I picked out 100 different companies that I like, that I think are solid companies that also pay a dividend. And I am looking to, I invested in those companies, and then I'm adding money periodically. So what I'm looking for here is I want to see my dividend payments slowly but steadily rise over time. So that being said, looking at my portfolio, it has gone up 4.63% in value. Not too bad. I'm pretty happy with that. Target is still by far my best performer. For those of you all who don't know, I talked about this in a previous video, but basically the way I selected the companies to own in this portfolio is I picked the 44 dividend aristocrats, and those are just companies that have increased their dividend payments for 25 consecutive years. Then I picked a couple stocks that I like, that I hold in my Robinhood portfolio or have been wanting to buy, and there's just a couple others thrown in there that I like. And then the next thing I did is I picked out some real estate investment trusts that I liked and put those in there. So what's pretty cool about this, and I will go to the activity screen right here. As you all can see, I got paid dividends from 4 different companies on September 12th. Now these dividends are very small because I own fractional shares in all of these companies. So like Walgreens Boots Alliance, I got paid 3 cents. I own some 3M. PPG is it's in the basic materials sector. Got 1 cent from them. Archer Daniels Midland, they paid me 4 cents. And as you all can see, I've been getting paid small dividend payments, multiple times a week, pretty much ever since I started this portfolio. So I really enjoy seeing these dividend payments come in, and these dividend payments get reinvested into my portfolio. And really just seeing these dividend payments makes me want to keep adding money to this portfolio. To give you all a little more idea about it, this portfolio is at a 3.3% dividend yield, and I will come show you that here on this screen. So if I go to the research tab, go to search stock funds and expert pies, or actually if I click these 3 bars in the top left corner, and then I hit my pies, then I can go and click on my portfolio, and it'll give me a few details about this portfolio that I have. So as you can see, I have 100 different holdings. I'm holding 100 different stocks. Expenses. So expenses usually refers to if you own any if you own any ETFs. A lot of those ETFs will charge a small fee, and that's like a management fee. So because I don't have any ETFs, I don't have any expenses, and my dividend yield is at 3.3%. Now, if everything goes according to plan, this dividend yield will hopefully go up over time. So the money that I'm investing will yield me more and more money. And especially because I am reinvesting these dividends, my yield on cost is certainly going to go up over time. So that's one of the things that gets me excited about this portfolio. So since my last video, I did add $30 to this portfolio, and we can go check out the activity here, and I will click on and show you all what I bought. So as you all can see, M1 Finance went through and purchased shares of these different companies, and I've talked about this in my previous video, but the way they buy shares is they buy shares so that your portfolio matches or reflects the targets that you set for each stock. And that might sound kind of confusing, but what I did is I said that I want every dollar that I invest to be distributed across all the stocks that I have in my portfolio equally. So, for example, let me go back to my portfolio here. Because Target is doing so well, it represents a bigger chunk of my portfolio right now. So M1 Finance will invest less in Target, and let's look at a stock that's not doing so well. So like Colgate Palm Olive Company, they will invest more money in because it represents a lower percentage of my portfolio because it has gone down in value. So yeah, that's my M1 Finance portfolio, and if you all hang tight, I will show you my Robinhood portfolio. All right, so here we are in my Robinhood portfolio, and some of you all might know, some of you all might not, but Robinhood actually just had a update, and this update, for the most part, the big thing they added was messages. So here in my messages tab, I'll show you an example of a message you might get. So if you own a stock that pays a dividend, in my case, it's Realty Income. They sent me a message and said, because I own a share of the stock, I received a dividend. So I kind of like this. This seems like a pretty neat, feature. Now it's just as easy to go in your history tab and see the companies that pay dividends or the dividends that you have pending. But at the same time, it's still a pretty cool little feature. So talking about my portfolio overall, at the time that I recorded this video, I'm up 11.4% all time, or about $887. Over the past year, I'm up about 5%. Over the past 3 months, I'm up a little less than 1%. Over the past month, I'm up a little over 1%. Over the past week, if we can get this to load, hold on. Over the past week, I'm down a little over 0.5%, and today I'm down 0.3%. So not a whole lot has changed since my last update, but I do want to talk about Chegg. So I've talked about Chegg in the past, and Chegg is a company that I do really like. Their price has gone down quite a bit over the past few months. So Chegg hit a high at, it was about $45, almost $46. And then ever since then, it's just kind of been dropping. The big news lately is they are acquiring a company. I forget the name of this company, but this company has an online platform where you can like teach courses, and people can sign up to it and learn. But they purchased this company, and I guess a lot of people did not like this. They didn't think it was a good deal, which is why Chegg has gone down significantly. Personally, I think it's still a good stock. I still like it. It's one of the few things that I'm willing to pay for on a regular basis. I have a Chegg study subscription, and what this does is it offers worked out solutions to like textbook problems. So a lot of times when I'm studying for tests, I'll use the Chegg study, because sometimes I'll get stuck at a certain point in a problem, and Chegg study will show me, okay, once you've gotten to this step, this is the next step you need to take in order to solve the problem. I'm a mechanical engineer, just to give you all a little background. Currently working on getting my master's degree. So that being said, I like Chegg, still think it's a good company. I will say that a lot of I made a video a while back, I believe it's titled, What I'm Doing to Prepare for an Upcoming Recession. And I said one of the things that I really liked, or a couple of the stocks and ETFs I really liked. One of them was XLF, the financial sector ETF. And that's actually done really nicely since I bought it. I'm up 7.5% on it, and I bought that about a month ago, and yeah, doing pretty well on it. Pfizer's also doing pretty well since I bought it. I'm up about 8% on that. Another thing that I bought was a high dividend ETF, and I am currently up about 7.5% on that as well. And then the last thing I bought was a Treasury index. I'm actually down 6.3% on that. And like I said, that was kind of a very passive play. I was, kind of worried there might be a recession, and that's one of the things I bought. that's just like it's generally considered to be super safe. If the economy was to drop a lot, this would probably go up in value. But other than that, I don't have a whole lot else I'm going to talk about for this portfolio. I'm still adding money to this every once in a while. Right now, my main focus is on that M1 Finance portfolio. I really like to see those dividends coming in. It's just really cool for me. But whenever I want to buy an individual stock, I use Robinhood, and M1 Finance is kind of more a passive approach, just investing money in that, letting M1 Finance go out and buy those partial shares of 100 different companies for me. But yeah, I think with that, one other thing I'd like to talk about is Apple. So Apple has been doing pretty well lately as well. Some of you all might have seen, they had an announcement a couple days ago about the new iPhones, about they talked some about like the Apple credit card, and I really like Apple, and I think they have the potential to continue to grow in the future. So keep your eye on Apple. If there's a dip, it may be a good opportunity for you to buy. As always, do your own research on these companies before you buy them. Just because I like them does not necessarily mean that they're good companies, or good investments, I should say. But that being said, I want to thank you all for watching the video. I hope you enjoyed it. I hope you learned something. If you did like it, please hit the like button. Please subscribe to the channel. And that being said, I'm going to wrap up the video for today. So thank you all for watching, and take care.